Okay, welcome everyone. This is the Q2 Global HR Tech Investment Review live, something we do quarterly. And, we work hard to gather investment data from a number of both data and news sources. We're up over 60 sources now, and it's a labor of love to pull this all together. And I always find it interesting, and looking forward to sharing this with you today. So let's go ahead and cover a couple housekeeping items. First off, this is not financial advice. While investors are members of HRWins and look at a lot of the content and are in fact registered here in the webinar today, I'm not giving financial or investment advice. I'm tracking the investment, looking at the trends, aligning those with the HR, talent, and market trends, and looking at emerging technology, looking at where investors are spending their time, and then on the employer side, helping employers understand, what's coming for emerging technology, how to think about whatever transformation project, whatever they're focusing on, and what they should be looking at in the pipeline for new and innovative technology. It's not just about investment. I'm also looking at incumbent vendors, scale-ups, operational endeavors, and their product roadmaps, and putting that in context as well. Now, today we're here, though, to talk just about VC, and it is impossible to track all of the VC. It is not all announced. It is not all reported to any centralized clearinghouses for data. It is especially challenging to track the earlier stage investments, like the seed rounds or angel investments. But we do a pretty good job. I think we have the best list, and if anyone has a better one, I've yet to find it, and I'd be happy to grab data from those lists. The thing is, there are some folks who have jumped into the fray, and I see them talking about WorkTech. I see them talking about future of work, and we're very, very clear while looking at WorkTech and HR tech and where the future of work is going. We're not looking at general enterprise technology, so just be very careful with what you're looking at out there. And we're very laser focused on what's in market and part of the HR technology, recruiting technology, talent management, HCM conversation. So you can get all the details and even further insights at hrwins.com or with me directly. So there's your housekeeping. Let's move right into it. So 2020 year to date. So we just finished the first half of the calendar year, 1.87 billion, 130 deals. Not where I thought we'd be after the coronavirus hit. And, that is in the report, and here I'll tell you, got it wrong. If we look at, categorically how we're doing, while coronavirus might not have had an impact on the pace of investment or the dollar volume or deal volume, we are seeing a shift. And while if you take a look at the report, I'm not one to look at 1 or 2 quarters and say this is a major trend, but it's worth noting, and we'll compare the categories, not just on an annual basis, but we'll get into the quarterly numbers. We'll look at the quarters over the last 3 years and so forth. So you'll see what I mean by this shift. And normally we see more of a balance between talent acquisition and the human capital categories. When I look at the market, I look at the top level categories of HCM, which is everything core HR, talent acquisition, everything recruiting, and talent management. So from onboarding through the rest of the employee experience or life cycle, but not the core HR stuff. So talent management is where I would put learning and some of the engagement and employee experience and performance management, and it goes on and on. So those are the high level categories. We do look a level deeper, and you'll see it. We'll talk today about subcategories, and it's dozens of subcategories that we look at. And this is how we can look at how different apps are entering the market, point solutions, et cetera. But this chart shows you in 2020 here to date that, I mean, HCM being almost, receiving almost 3x 2x the number of the amount of VC than over talent acquisition. That's unusual. It's usually going back and forth quarter to quarter between those two categories. Is that a temporary condition based on investors sitting back and looking at what is a down economy and a different type of job market? It may be. Is it? But I think it really also is fueled by the shift into employee experience, communications and collaboration type offerings, learning, et cetera. And we'll get into a little bit more of that. But here's your big picture. Q2 itself, $1 billion. So we just eclipsed $1 billion in Q2. It's like 1.004, something like that, over 74 deals. And again, you can see it's a little tighter this quarter than it was in Q1 between the categories, but you can see how things broke down. Talent acquisition always has a fairly high deal count, which is not unusual at all. Talent acquisition always has a lower average deal size. So while it's classically the last 3 years has been, attracting a lot of venture capital, it's a lot of smaller deals, a lot of early stage and anchored with a few later stage deals. So let's dig in a little bit further, being sensitive to time. So let's put it in context, stepping back. So, it's good to look at 2020. It's good to look at the last 2 quarters. But when you're looking at something like investment coming into a market, we've been tracking this data since 2017, started January of 2017. So it's, we've got over 3 full years of data. We've tracked over $12 billion across 779 deals from 2017 to date. And you can see where we're a little tighter here between talent acquisition and HCM overall categorically. And here's how the deal, you can see the deal count is much higher in talent acquisition. So if you've been on one of these quarterly briefings with me before, you've heard me talk about the reason for this. Bear with me if you have. The membership has gone up recently. I know some new folks are here. So the reason this happens is in talent acquisition, we just have a lot of apps, a lot of point solutions, a lot of really focused solutions at any stage of the recruiting process or targeting any stage of the recruiting process. The biggest contributor to talent acquisition, as we'll see in a couple minutes, is job boards and marketplaces. So that really drives a lot of the investment. Investors like two-sided marketplaces. And as the job market it has evolved, as skills has evolved or have evolved, job boards and marketplaces have adapted, and as technologies evolved, new niches have emerged as far as the way that candidates are being matched, candidates are being sourced, but also in talent acquisition, I would say there are a lot of solutions waiting for problems. And a lot of solutions waiting for a market. So it's a place where everybody's got a better mousetrap. Everybody's been a hiring manager, or they've been a recruiter, or they've been a candidate at some point in their career. And without an overall context to the market or the process in general or the technology landscape in general, a lot of solutions get built sort of in a vacuum, and we meet a lot of founders who are really unaware of what's going on in the market. It's not a bad thing if they're innovating, but it makes for a lot of seed and early stage deals that never make it past lifestyle business, if you will. Okay, keep it moving. So if we break down the data year to year, we've got year to date here in 2020. You see we're about halfway through the year, looking at 2019. That was a big year with we've had a few big years, but over 5 billion in 2019. We're not off to a bad start, which is sort of surprising. Now that said, when I say we got it wrong, that's at the end of Q1 with the COVID-19, the sort of worldwide pandemic and economic downturn, setting in. There was a lot of hesitation and a lot of trepidation on the case of talking to investors, talking to entrepreneurs, talking to buyers, talking to the HR folks that we advise about, how they were handling it, where they were looking to invest, and when invest in purchasing the HR technology. And that all these things have, contributed to our view that there would be a slowdown in Q2. Now, understanding how this data is captured, we're looking at announcements that are citable sources and vetting all of those. Everything has a citation attached to it, and announcements lag behind deals, but we're 2 quarters into this. So we are looking at some fairly significant deals, and I'm aware of a few that are about to happen that started post COVID. So we're and some deals that were in play in, let's say, Q1 that were closed in Q2. So that all said, we'll get into observations and where I see things going later, but I do still expect a slowdown, and we'll talk about what might impact that one way or the other in just a few slides here. So now, then let's break it down by category through each quarter. And I like to slice and dice this data, and not just in these reports or presentations, but offline with Power BI and even in Excel. And so it's always interesting to look at this from a few different perspectives, but it's you can see that sort of 2018 emerging through 2019 was that a peak? Will there be another peak? I don't know. I do know that investors love this category and are very active in this category, and in a way, the economic downturn and really not so much the downturn, but the changes in work caused by COVID in work models. I would really say the acceleration of a few trends is causing investors to look for products and technologies that address what the now of work and what the future of work is becoming. And so there's a lot of conversation about, what will that look like, and a lot of unknowns there. So you can take that with a grain of salt and argue the economic downturn and anticipated ebbing of investment here while the market resets and while those things are defined, or depending on your level of optimism, you may look at that and think, well, we're due for another spike in this activity through 2020. Again, I'm not here to give financial advice. So let's drill down into the subcategories, because in many ways at the top level, while it's good to understand HCM, talent management, and talent acquisition at the subcategory level. So where the products fit within those market categories. That's what it's really interesting. I really like digging in at this level. So on the left side of the screen, we're looking at the last 3 years and looking at the subcategory performance. On the right side of the screen, we're looking at 2020 to date. And you can see that job board marketplaces are far and away and across all of HR tech the top category for VC investment globally. Still in the top 5 in 2020, but normally they sit on this chart it looks at the same way it does on the left side of the chart if we're looking at any given quarter, unless there's been a mega round in one of the other categories or subcategories. What is always interesting to most, where it's the first time they're digging in at this level, is just the fact that job boards that were, they were all counted out of the market by many folks. There was a lot of talk about the death of the job board back in the early 2000s, and anticipating that in the late 90s into 2000, and it's never happened now. This is not a renaissance, but what job boards have done is they've really led the way in specialization. They've really led the way in the focus from having to adopt new technologies, to source, looking at new technologies to provide talent acquisition leaders with better analytics based on how their job ads are performing, looking at new technologies for matching, and providing starting to provide additional value add beyond just the candidate and job match. Investors, as I mentioned earlier, love a two-sided marketplace, and job board marketplaces are just that. Now we're starting to see, and I'll get into it later, some hybrid models where you've got a combination of the job board marketplace in a traditional sense and learning or training or certification, and that even extends into university and college degrees, where there are accredited programs being funded by employers with career tracks displayed in through this job board marketplace, and students then contributing to projects and sort of like in a internship for hire on a contingent basis through their course of education, and then of course ultimately being a path for talent into those organizations that are funding it. So a couple of those in the Bay Area, funded by the likes of Google and Apple and Microsoft and so forth. But beyond that, when you look at that list from 2017 to date, we're looking at a lot of core HR toward the top of it. There's been a lot of innovation in payroll with on-demand payroll. Payroll is a necessity, right? So in the SMB, in the middle market, in every business, we've got to get payroll right before we earn the right to move on to other aspects of the employee relationship. The basic contract is that we pay our employees on time. We've got to get that right. But even more so now with the lens on pay equity and equality and how this relates to diversity and inclusion. Compensation is something that, while I would break it out, it's important. Payroll's coming into a new lens, and the HRIS platforms are getting a little bit reinvigorated as they retool and offer cloud-based, flexible, more beautiful software with better analytics and capabilities in that regard. Benefits and wellness, learning, these are all areas that are contributing to employee experience, contributing to new models of work, contributing to reskilling and upskilling and internal talent mobility, whichever the buzz phrase is you want to throw at it. And wellness in particular is evolving into total well-being. Looking at, we've got a lot of one-dimensional apps like financial wellness, physical wellness, emotional wellness, we're looking and career wellness. And now the platform play is starting to emerge. And what's interesting is the market force play there is starting to emerge. Most folks are surprised to see that assessments is high on the list. It's high in the quarter. It's high for the last 3 years. And that consistently the ATS, applicant tracking systems and talent acquisition suites remain, in the top, what do I have, 10 here. So that they aren't going anywhere. Everybody loves to hate the ATS and everybody, loves to knock the recruiting platform play. But there have been a number of emerging vendors and a number of interesting investments happening in that space. And the market share has been shifting over the last 5-10 years, slowly, but shifting. I think, this quarter in 2020, there aren't any major surprises, but you can see how, while we're not looking at a new list of subcategories, we're starting to see some shifting, right? Learning bubbling up to the top and a number of hybrid models, as I mentioned, coming up there. Assessments, again, people are surprised to see assessments always so high on the list, but I find that those who knock assessments have never implemented them and had the guidance of an IO and real data analytics or analysts and seen them work effectively. And there's a time and a place for assessments, and when used properly, they're incredibly effective. I've seen it firsthand in the field as a practitioner, and I've seen it advising on with employers, some amazing results across the board, whether it's a skills or a more cultural assessment from a fit perspective. So there you have the subcategories, and there's a lot more data on this in over every quarterly report on HRWins. So the biggest VC deal isn't necessarily doesn't do anything but validate that vendor's model and pitch at that time. In my opinion, it's not necessarily that raising the most capital is the best capital or the best way to move forward, right? I always advise, wait as long as you can, and don't give away as little of your business as you can, as little control. But there is a point in time where, in order to drive market share, you've got to, as a founder, I know we've got some executives on the some entrepreneurs on the webinar today. You've got to be comfortable in your own skin, right? As in life, as in business, you have to know what you want to be. Do you want to be the market leader? Is that what you're driven by? Do you want to be the market share leader? Do you want to be the biggest brand? Or do you want to deliver a product in a targeted space that delivers value and profitability and provide an experience not just for your customers but for your employees? These things aren't mutually exclusive if you take a lot of funding, but what you're driven by and what path you take should be driven by who and what you want to be as a business. So that's all I'll say about how much funding you raise, and I dig into it for hours with the tech vendors that I advise. But the biggest deals for the last few years, some names. GymPass is an interesting one because they're known as a subscription model so that you can use a gym anywhere in the world. Back in those days when we used to get on airplanes and travel, but they moved into the employee benefits market. I think it was last year, and in the last 6 months, I've noticed with their product roadmap and their releases, they continue to invest in the corporate benefit approach. RigUp, job board marketplace focused on oil and gas industry. Hasty is a on-demand pay solution. They were really one of the first, one of the earliest, but they're focused in the UK, and the model for pay in the UK and in Europe is different than the US in the sense that, you know, here in the US we have a fairly standard weekly or bi-weekly pay cycle. It's moving in that direction there, but not. It's especially in the SMB, in hospitality and restaurants, when they were churning a business, the pay cycles vary, right? It can be monthly, and there's a lot of shift work and so forth. So getting access to on-demand pay is more of a necessity in today's market in Europe than here. While it is certainly almost a benefit for folks in the SMB, it's more about, you've sort of got two profiles in the US where it's for folks earning, you know, lower wages, closer to or at the poverty line, who need access to funds to pay bills and to exist, or folks well beyond that, and it's more of a luxury item, if you will, and one way to look at it. MyMy is a Chinese job board. We know JobVite. I do include growth capital that came from private equity, but on the course of over the last 3 years, it's nearly a rounding error if you look at how it impacts the numbers. 2020 to date, these deals are all, I go into great detail on the HRWins site, and I want to keep this moving in the sake of time, but you'll find an analysis of each of these deals. The ones I would call out would be Udemy on in the learning space, just, you know, noting learning. Swile used to be Luncher or Lunch HR. It's a French company that started providing, again, a different model in France and Europe, where companies provide, in France, they provide this lunch card as a benefit to employees, and they go out and they, you know, pay for lunch. They've moved into the benefit space. They've extended, and moving into perks is what we would call it here as well. So an interesting play there. And France has been emerging, you know, coming up on the radar in the last 2 years, more and more consistently, as really in both from a government perspective, investing in startups and technology and creating that foundation, but the HR tech category, we've seen a lot of activity there. Headspace is another one to call out, the meditation app, sort of like some of these other players in the wellness space, like, you know, GymPass earlier. They've very deliberately moved into the corporate space, the HR space, the benefits space, and I expect some interesting things from them in the next year or two. I'm going to keep it moving, get into observations and so forth in a moment. So this quarter, something different. I'm looking at the investors. I always get a lot of questions. And by the way, if you have questions, drop them in the Q&A, or feel free to email me. Feel free to you know, hit me up on Twitter. However, you can find me everywhere, and I'm happy to engage with any specific questions. If you're an Insights and Advisory member, you can get a deeper cut of the data. If you're a data member, you can go online, access the VC database in the interface that we've built there, and get some you can do some great slicing and dicing there. Insights and Advisory members can get a deeper cut to this data, a custom cut, one per year, and everyone else is on a sort of newsletter or access data, you know, sort of content access membership. So that's how you can interact with me, get more information, perspective, or access to the data. But this quarter, looking at investors, which is a little different than something I've done. I've always looked at it, but haven't shared it here. So I thought it would be interesting to show you who the top investors have been in HR tech overall in the last, you know, well, it's over 3 years now. And this is a, you know, these are names that you see in the media investing in tech. Again, this space has been hot for a couple of years. It's attracting a lot of capital, and all of the major players, SoftBank, Andreessen Horowitz, no matter what you think of them, all of them, each of them, I should say, the top five here, have been in this space and made major investments across categories. When we look at the categories, so who's investing in what categories, you'll see that it brings out some other either corporate players, some of that private equity that I mentioned, or just additional VC firms. And the lines between private equity and all of these different sources of funding are blurry. So it's getting more and more difficult. I just look at growth capital and where the play, if the play is an ownership play, then I tend to put it in a different bucket than growth capital, if you will. But you can see who's investing. It's again, it's a who's who of VC. So if you're one of the investors or startup, entrepreneur here on this, watching this, you're saying, well, that's great. That's not surprising. They have more money. They're investing in later stage deals. And so of course they bubble up to the top. But what about, everybody always, especially on the, in the startup community, they want to know who's doing the earlier stage deals. And I'm not going to make life easier for any of you. So when we look at investors in seed rounds, I couldn't possibly list it here because let's look at, the number of deals in HCM since January of 2017, seed deals that we've tracked, 50 deals, and that's across 45 investors. This is just seed deals. Talent acquisition, 125 deals across 97 investors. Talent management, 75 deals, 72 investors. So, the question always comes up, who's investing in early stage deals in, insert category here. And if I break it down to subcategory, it just gets uglier, or it's the same. It's, a large number of investors in a large number of deals. So it really gets into, understanding, who's, repeating. And again, there's not a lot of fall off from the top to the, only 3 had multiple deals that were tracked in talent management. So it's about knowing who the list is. It's about networking. It's about, working with folks, advisors that focus on the technology space like me and others, or there are folks that work just in advising investors and corporate funds. And so that doesn't make your life any easier. And now you see why there's never a great answer to that question. So the part that most people dig in on with me or we spend a lot of time talking about are observations. So some of these are not new observations / trends. There are a few new notations. Some of and the way I look at the market, when I'm looking at a trend or sort of how work is evolving, what the HR leaders that I work with and talent leaders that I work with are telling me they're looking for, where their organization is moving, and I look at the technology marketplace and who's satisfying those needs, and I look at where investors are putting their money. Most of the time there's alignment there, but I'm not looking at, short-term, reactions to a moment in the market today. We do see deals like that. We're seeing them now based on COVID. Some of them are reactions that have a very long-term strategic play, but I'm looking at the trends. I'm looking at where the market's going over a long period of time. And most of the trends that were in play before COVID and the change of work are in play now. They're accelerated. And how HR tech, so this before COVID hit, this first line, new work models yet to be supported in HR tech in 2019. If you go back and watch the webinar, before COVID was on anybody's radar, that's what we were saying. And what we mean by new work models, look at it from a few different places. So we look at right now everybody's talking about remote work and distributed work. Our 2019 Workplace Intelligence Report, we found about half of companies were offering some kind of alternative work model, whether it was remote work, full-time or part-time, or ad hoc, remote, part-time work, job sharing, these different models. But they were not, this is 50% offering some form of alternative work model. And HR tech, whether it's from a recruiting perspective, an engagement perspective, a learning perspective, an onboarding perspective, even a core HR perspective, there wasn't a lot of alignment at that time with those models outside of pay class, pay grade, a tick box in the equivalent of a spreadsheet or an in-app report. At the same time, we've got other models that have been emerging and continue to emerge, and if anything, are getting accelerated now, like the contingent workforce. The contingent workforce and the gig economy, while conflated, are two separate things. Gig economy is, your Uber, your independent operator, on demand. That's the gig economy. You can argue with me about this, but the contingent workforce is contract and freelance that is within the workforce, across large enterprise, and now increasingly in the SMB. That has existed since, as long as I've been in the market. It really emerged and started going gangbusters in the late 80s with tech and large tech infrastructure, and the staffing industry really shifted to where the cash cows in staffing are all on contingent and temporary work, if you will, freelancers and so forth. Those models previously, again, were sort of managed through procurement in the large enterprise. They were managed through operations, and it was a matter of licensing, contracting, and pay class, if you will, and budgeting and planning and line items and more of a financial operations perspective. Today, they're integrated into the workforce. So I've yet to work with an employer who doesn't have a high percentage, and high percentage, I would say anywhere from 20 to 50% of their workforce in contingent. These hybrid teams are it's the reality. And with the economic downturn here, we're going to see more and more employers hedging their bets and putting more into that category. And we are woefully inadequate when it comes to recruiting models, and even more so recruiting technology models that let hiring managers, recruiting teams make game day decisions based on good analysis of availability of talent in either one of those categories. I have a full-time candidate, I have a contract candidate, and many times that's how they approach the work. I would hire full-time, I would take a contractor. I'm focused on contracting now, but man, this person's really good, or there's a good candidate in the database, let's get them on board. At the same time, when you take that through the employee life cycle, the employee experience, how do you motivate them? How do you integrate them as a part of the team? How do you keep them engaged? How do you balance that against co-employment issues state by state? This is complexity that HR tech has not addressed, and it's not about the payroll system. It's about the experience. So that's what I mean by new models not yet supported. I don't think investors are they're not looking at that level of complexity. They're looking, I see a lot of, today I see a lot of apps that are, any subcategory, and they've just shifted their messaging to lean into COVID and remote work, whether that's recruiting, whether that's HR. There aren't any that really have invested in that. There are very few, I should say, that have invested in that distributed workforce and supporting that. And that's the way large middle market and emerging high growth enterprise players build their workforce. It's distributed, it's remote. a lot of the time, a very large percentage of it, and it's leaning into non-traditional work models. One thing that was a huge trend pre-COVID and has been accelerated is this conversational HR tech. It's been largely focused on recruiting, spend a lot of time on that. If you activate HCM, we've done, did an interview management market landscape there, about to do one later this month on literally conversational HR tech for the recruiting market. But now I'm seeing startups that are focused on later stage. We've seen it in small areas. When I say later stage, I mean the rest of the employee experience. We've seen it in specific areas like benefits, where you've got a big spend, a big cost. We're looking to provide, conversational technology that helps employees make better decisions, but also helps employers get into not just benefit selection, but there's a component of wellness there and the goal is to, contain the costs from an employer's perspective. We've seen it in, very narrow slices. I'm starting to see more of the conversational sort of end-to-end layer enter the rest of the HR space. Had a call with a vendor yesterday who does this, like we've seen it in the recruiting space. Job boards and marketplaces, while they're taking a momentary beat on the volume of venture capital, are continuing to innovate. They're the emerging vendors, the new entries to the market, and they'll continue to develop new models. They're really setting the high bar. They're sort of leading the charge for HR technology in specialization, and we're going to see that specialization dovetail into the rest of HR technology, especially in the startup world, because that's, focus is what helps you grow. It's what helps you prove your model. It's what drives momentum. And that's what job boards, because it's a marketplace, because it's so transactional, they learned that years ago, and they've been driving that specialization, whether it's via technology and capabilities or audience, customer, and market segments. They're leading the way, and I expect more of that from them. Talent mobility is a big one. I'm starting to see more internal mobility, upskilling, sort of internal recruiting. As we all know, that's a hot button right now, and pre-COVID, seems like years ago, but Amazon invested hundreds of millions in what was really a drop in the bucket for them in reskilling a very small part of their workforce, but it made major headlines, and it really set the dominoes falling, in my opinion, as far as this trend was concerned. That said, a lot of what I see is matching. I see internal matching, whether it's assessment driven, skills driven, creepy listening to the network driven, but it's matching. Matching is it. And that is not what talent mobility is. It's not just matching. That's a big part of it. But talent mobility is about learning. It's about career path. And I think we're starting to see the emergence of recruiting and learning and talent and integrated into talent management in a new way that has to do with this internal mobility. Big announcements from Microsoft about some of that in this last quarter or two. And I expect to see more emerging vendors that are really doing something unique in that regard, versus, everybody's got a matching engine black box. And, we need more than that. Employee experience is evolving. It's been a big buzzword for a long time. I've been looking at it for years now, and it really is how the employee engagement market has evolved, or that trend. And these observations are in no particular order, but the employee experience today. And I started giving a presentation 2 years ago about the fact that there are three facets. Adam Morgan's work on employee experience a few years ago sort of led me down this path. Three facets to employee experience. There's the cultural experience, the technical experience, and the physical experience. And people would always look at me a little funny on the physical experience side. And COVID has brought us back full centered on that physical experience, employee safety, the return to work, the work environment, do you have to commute to work? Can you work from home? What are those work models? That part of employee experience is probably the most discussed at the moment. The digital employee experience is what a lot of folks like to spend their time talking about, and that's how we interact with the HR apps and apps in the workplace. But the technical experience is really much more than that. You know, if you're a truck driver, it's the truck you drive. It's the tool that you use. If you're a nurse today, do you have enough PPE? But, you know, what are the tools that you're given to do your job? And how does that impact your satisfaction and your perception on engagement and experience? And then cultural is, you know, behaviors and beliefs and really where engagement and drives high-performing cultures. So look for a lot more here around analytics, around existing platforms like the Culture Amps of the world who are tying this experience together through to learning. And I would expect more here, and I would expect investors to catch on this shortly, given the Microsoft announcements especially. We talked about learning hybrids, and the big thing about right now, the economic, you've been through a few economic downturns. I've done it as an HR professional. I've done it as a vendor, a tech vendor. I've done it as an analyst. And what happens, it is not about the market, stopping its growth. We've had an incredible growth in the HR tech global total addressable market and serviceable addressable market, over the last few years, based on the emergence of the SMB and the middle market and new technologies and these new work models and how the technology overlays sort of into the organization. We are certainly seeing a momentary fall back in that. But every time this happens, we come back with a surge. Now, I'm not saying that's going to be anytime real soon. I'm not an economist, but every economist that I follow tracks this downturn over a long period of time and a very bumpy ride. So people talk about the W, and I always say, how many Ws, if you're familiar with those charts. But new growth will come out of this, and new growth not just in market growth or revenue growth for tech vendors, but growth in the way we approach our the now of work, the future of work models, everything we've talked about on these trends. The key for HR leaders is seizing this moment. The key for HR tech vendors and leaders in HR tech is understanding how the new framework of HR is evolving, and it is evolving rapidly, and providing solutions that fit within that framework, that new maturity model, and investors, understanding more than the rudimentary basics about recruiting and hiring and management, and really picking the players that are going to help move this forward. And new growth is coming in many ways, qualitative and quantitatively, because of this. So that's what I have for you today. I've exceeded the time that I asked you to have available. So I'm going to stop rambling, say thank you. Again, you can reach me on email with any questions. My email is there, Twitter handle's there. I'm on LinkedIn. Connect with me if we haven't done so already. And as always, there's a bunch more content coming. In fact, I'm making some major announcements next week about some really big reports in the employee experience category that I think anybody on this call will be interested in seeing. So keep an eye on HRWins. Thanks, everyone, and looking forward to talking to you again online and next quarter.